Alright guys, let's talk about future and options, one of the hottest topic in the stock market today. A lot of people are getting into F&O trading because they see the potential for massive profits, multiplying their money several times over. But here is the thing, do you know how it is taxed? Whether you are making profits or even losses in F&O, you need to understand the income tax rules. Because even losses can benefit you if you file your ITR, that is income tax return, properly. So in this video we will break down and cover turnover calculations for F&O, ITR forms like which one to file, ITR 3 or ITR 4. Next is section 4480. Should you opt for it? Next is audit requirements. Do you need an audit if you are making losses? And the last is how to legally minimize your taxes in F&O trading. This is an absolute must watch if you are serious about trading. I am Hardeep and you are watching Moneydan, a sebi registered investment advisory firm. Since you are looking for expert insights on tax planning, trading and investments, make sure to subscribe to Moneydan and check out moneydan.com for more in-depth resources and updates. F&O trading, business or just a hobby? A lot of people think I just tried F&O trading for fun, so I don't need to show it in my ITR, right? Wrong. You are absolutely wrong. Every stock market transaction is tracked in your AIS, that is annual information statement. Whether you are a salaried professional, a student or even a housewife, if you trade in F&O, you must report it in your tax return. And here is a big misconception. F&O trading is not considered investing. It's treated as a business by the income tax department. Just like a shopkeeper selling goods, your F&O transactions are counted as business income. That means you must file ITR 3 or ITR 4, not ITR 1 or ITR 2. Your F&O transactions are treated as non-speculative business income. So don't make the mistake of thinking this is just a side hustle. It's a business and it's taxed accordingly. F&O trading part 3. ITR 3 versus ITR 4. Which one should you file? If you are doing F&O trading, you have two options. First is ITR 4, that is presumptive taxation under section 44 AD. Let's discuss about pros and cons. Pros are no need to maintain books of accounts, just declare 6% of your turnover as profit or the actual profit, whichever is higher. And the cons are you cannot claim expenses separately. The second option here is ITR 3, that is regular business income. The pros are you can deduct expenses like brokerage, transaction charges, internet cost, electricity, etc. And the cons are you need to maintain books of accounts, that is profit and loss statement and balance sheet. But here is where it gets tricky. If you opt for section 44 AD, that is ITR 4, and later decide to switch it to ITR 3, there is a penalty. Once you choose 44 AD, you have to stick with it for 5 years, or else you cannot use 44 AD again for the next 5 years, and audit will be mandatory even if you have a loss. Part 4. Let's understand with an example. First year, you earn 5 lakh rupees profit with a 50 lakh turnover in F&O trading. You decide to file ITR 4 under section 44 AD, where you either declare 6% of turnover or actual profit, whichever is higher. 6% of 50 lakh rupees is 3 lakh rupees, but your actual profit is 5 lakh rupees. So you declare 5 lakh rupees. Since your total taxable income is 5 lakh rupees, you qualify for the 12,500 tax rebate under section 87A. So the final tax payable is 0. In year 2, suppose you trade even more, your turnover jumps to 2.5 crore, but this time you make a 6 lakh rupees loss. Now where is the problem? If you stick to 44 AD, you must declare 6% of 2.5 crore, that is 15 lakh rupees as taxable income, even though you actually made a 6 lakh rupee loss. That's a huge tax burden. So you think, let's switch it to ITR 3 and show my actual loss instead. Big mistake, my friend. Since you opted for 44 AD last year, you are required to continue for 5 years. If you try to switch it to ITR 3 before completing 5 years, you must get a mandatory audit done, even if you made a loss. This is why choosing 44 AD requires careful planning. It works well in profit years but can backfire if you have a high turnover loss year later. So before choosing 44 AD, ask yourself, can I stick with it for 5 years? Otherwise, go with ITR 3 from the beginning. Part 5. Turnover calculation for F&O. A lot of traders get confused about how to calculate turnover for F&O taxation. Let's simplify. Let's say you did 3 trades today. Trade number 1, you made a profit of 50,000 rupees. Trade number 2, you made a loss of 30,000 rupees. And trade number 3, you made a profit of 40,000 rupees. So how do we calculate turnover? Turnover is equal to 50,000 rupees profit of first trade plus 30,000 rupees loss of second trade plus 40,000 profit from third trade. Total turnover is equal to 1,20,000. See what's happening here? We are adding absolute values. We are not subtracting the losses. It doesn't matter if it is a profit or a loss. Everything is added as a positive number. In nutshell, turnover is equal to net profit. Your tax liability depends on net profit, but audit requirements depend on turnover. Part 6. When is audit mandatory? The rule is simple. If your turnover exceeds 10 crore rupee, then audit is mandatory. No exceptions. Period. But here is where it gets tricky. If your turnover is below 10 crore rupee, you might still need an audit in these cases. First, you have opted for section 44 AD but want to declare less than 6% profit or a loss. Why? Because under 44 AD, you are expected to declare at least 6% profit on turnover. If you declare less, the tax department says, prove it, and that means an audit. Second case, you have previously opted for 44 AD but now want to switch back to normal taxation, that is ITR 3. Once you choose 44 AD, you have to stick with it for 5 years. If you try to switch before that, the government slaps an audit requirement on you as a penalty. Part 7. Losses in F&O. How to turn it into a tax benefit. Now let's talk about the biggest mistake traders make. That is not filing ITR when they have losses. Why is this a mistake? Because F&O losses can be carried forward for 8 years and set off against future profits. But only if you file your ITR before July 31st. Set off losses, that is, if you have a 1 lakh rupee loss and a 2 lakh rupee salary income, your taxable income reduces to 1 lakh rupee. Carry forward. If you have a 1 lakh rupee loss but only 50,000 rupees in taxable income, the remaining 50,000 loss carries forward for future years. Even if you are in loss, file your ITR before July 31st so you can legally reduce taxes in future years. Part 8. When is audit not required? First is turnover below 10 crore rupees and you declare at least 6% profit under section 44 AD, that is if opting for presumptive taxation. If you meet both conditions, you do not need an audit. You can file your ITR without one. Now let's discuss about CA audit fees for F&O traders. If you need an audit, the CA charges depend on turnover and complexity. If your turnover is up to 5 crore, audit fees can vary between 15,000 to 30,000 rupees. If your turnover is between 5 crore to 10 crore, audit fees would be 30,000 to 50,000 rupees. And if your turnover is above 10 crore rupees, your fees may vary between 50,000 rupees to 1 lakh rupees. An important tip: many traders try to avoid an audit by strategically planning their profits and tax filing. Consult a CA before deciding whether to opt for 44 AD. Part 9. Conclusion: make smart trading and tax decisions. If you are trading in future and options, you need to treat it like a business, not just a side hustle. That means understanding turnover and tax rules to avoid unnecessary audits, choosing the right ITR form, ITR 3 or ITR 4 based on your trading style, moving when an audit is required and when it's not, maximizing legal tax benefits while staying fully compliant. But let's be honest, taxation and trading strategies are complex. Most Indians pay taxes more than they save money in a year. That's the situation in India right now. That's why, if you are serious about trading, you need a professional who is truly on your side. Part 10. Hire a sebi registered investment advisor. No commissions, no conflicts. Most so called advisors make money by selling you products like mutual funds, insurance, stock tips, brokerage commissions, etc. But a true sebi registered RIA does none of that. A real sebi RIA works only for you. No commissions, no brokerage, no hidden agendas. Pure, unbiased, fee only advice designed to grow and protect your wealth. 100% transparency because their only source of income is the fee you pay for their expertise. If you want genuine conflict free financial advice that prioritizes your profits, your tax savings, and your financial growth, hire a SEBI registered investment advisor today. Make informed decisions, keep more of your profits, trade smart, and stay compliant. If you found this useful, hit the like button, subscribe, and let's build wealth the right way.